Good morning. Yes, indeed, we launched our refresh strategy earlier this year, and we're now 6 months in, and our strong performance in H1 very much reflects the strategic decisions that we've taken in recent years that relates to technology investment, cost reduction, and indeed acquisitions. Our performance also very much reflects the execution of that strategy this year. Our loan book grew by 12%, very much underpinned by pricing and risk discipline. Customer base up by about 7%. And on the wealth side, an important part of our business, value of assets under management grew by 7%. That's our strategy in action. And of course, to your point, our performance was also supported by a resilient economy, particularly in Ireland, and a favourable interest rate environment.
I'm interested to hear that your 2023 outlook was upgraded. Net interest income in the second half of the year is expected to be modestly higher than the first half of the year. Very interesting commentary given where we are in the hiking cycle. Some people are saying that the ECB are pretty much done with rate hikes at this point. So what gives you confidence that in the second half of the year, NII is going to move in your favour?
Yeah, so at the half year, we reported a return on tangible equity of 18.5%. And I say that because that's against the context of our target of 15%. That outperformance so far this year in many ways is supported by the rate environment being higher for longer. And generally, as monetary policy makers consider the backdrop of an inflationary environment, we can expect rates to be higher for longer. We expect them to come back down again next year, but again, it's supportive of our performance in the second half of this year, along, of course, with all of the other components of our business that are performing strongly.
Myles, hi, good morning. Tanvi joining in this conversation. New lending went up 20% year on year, which is quite heartening to see, but it was offset by reduction in net lending in retail and property lending. And I wonder, the series of hikes that have come through that have been passed on to mortgage hikes, how much of that is really impacting the business right now and demand for property loans?
Well, overall, our mortgage book grew by 6% in the first half of the year. And of course, that's a very important part of our business. And it's very much driven by a demand for homes in Ireland. And certainly we're very happy to be supporting that market. We also strongly support the development of new building of homes in Ireland. Right now, we're funding about 18,000 homes being built. That's in the context of an annual demand of about 35,000, so that's significant. I also want to say that we're announcing today that we are increasing our available funding for home building by about 70%. That's a strong commitment. Now, more broadly to your point on CRE, commercial real estate, the interest rate environment is a factor, and certainly, particularly in relation to international exposures, we're particularly cautious about putting capital into those particular asset classes.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.